let's talk assumable loans. I've had this come up a few times, so I think that there is a misconception about them and people don't know a lot about them. So what an assumable loan is you're essentially going to the seller of the house and you're taking over their remaining mortgage. What does that mean? First, yes, you're taking over their mortgage, but you also have to qualify for that mortgage. So you're not just signing over the mortgage from one person to the next. You would have to work with that seller's lender to qualify for that, and you would have to work through their assumption department. So there can be different guidelines from lender to lender. So once you've qualified for that, you then have to come up with the difference from the loan amount to the actual purchase price. So let's say you're purchasing a home for $500,000. There's a $250,000 mortgage on the house that you're going to assume. You would have to come up with, in cash most of the time, the $250,000 extra. So whether that's cash that you have in the bank from a previous sale, whether that is a HELOC you've pulled from a different property, because most mortgage lenders are not going to go in with a primary residence mortgage and be in that second lien position. So you have to come up with that difference somewhere in cash. Now, I've talked to a lot of people that I work with and asked them about assumable loans because I always am wanting to learn more. Everyone I've talked to has said that they've never had a client that successfully finished the transaction. Does that mean that they never happen? Well, clearly not, because they do happen, but they can take a lot longer. You're at the mercy of the lender who's making this decision on the overall assumption. So for a seller and a buyer, it seems really nice, but it's not always what it looks like. It's going to take a long time to close, and you may not get the updates that you're used to. So I get why sellers and listing agents want to put that out there, because it is like a little carrot to dangle of like, look at what this is. We have this amazing mortgage rate of 3%, and it gets people in the door. So I would probably use it if I was in that situation too, but it's not always what it seems. And assumable loans can be much harder than people realize. Is that always the case? No. But that kind of breaks down a little bit what an assumable loan is and kind of how they work. There's always more that goes into the loan process. So don't come at me if you have successfully closed an assumable loan. But my name's Carrie Haines with Movement Mortgage. If you have any questions or would like to get pre-approved or go through a pre-qualification, you can follow the links below, and we are always here to help.